Yeah, hi everyone. Thank you for joining us today. I'm gonna say a few words about work on climate and then introduce our moderator Alicia and Tom, and then hand over to Alicia. So I am the founder and executive director of Work on Climate. You probably know us as being the world's largest community for professionals who are looking to create climate impact. And we helped several thousand people find jobs in climate and helped several thousand founders start or advance their climate startups. And many of you probably know that over the course of the last year, we have been going farther and deeper than that. We are deepening our work from only helping you navigate the world of existing climate job opportunities to really helping you unlock your capacity to lead change in your companies, your industries, and your communities without waiting for someone to ask you to do it. You can learn more about that on our blog, but our work is guided also by the vision of a regenerative economic system, which is a really important topic that we'll touch on today. Alicia will be moderating this event. Alicia comes with a private equity background, and she's been supporting Work on Climate as a volunteer for several months by now, most importantly on our founder programs and our community programs. And finally, Tom. Tom hardly needs an introduction. He's a veteran of the venture community. Tom is the founder of Baruch Future Ventures. He's focusing on climate sensitive markets and climate deep tech. He's also a senior advisor to Breakthrough Energy Ventures. And Tom had an incredible career path that actually started of all places at ExxonMobil. But then his entrepreneurial career took him to start multiple deep tech ventures and investment firms, managing over $1 billion in assets, leading 18 IPOs and an incredible 10 unicorn exits. Tom has also advised the Obama administration on innovation. And today, Tom will talk about climate investment in today's world and about the connections to Work on Climate's guiding vision of a regenerative economy. Thank you again for coming, everyone, and thanks so much, Tom, for finding the time to share your wisdom with the community. I'm going to hand over to Alicia.
Great. Thank you, Eugene. A little bit of housekeeping first. The session will be recorded. Your contact will be shared with Tom's team for some follow-ups. We're going to aim for about half an hour of moderated discussion, then around 10 minutes for pre-selected questions from our audience. So thank you all for submitting those via Luma. We're going to have about 10 to 15 minutes for breakout rooms at the end, and then come back and wrap up. So we can go ahead and get started. Thank you to Tom, of course, for being so generous with his time. So yeah, let's get started. Uh, good.
Gosh.
There we go. Okay. So we have three broad topics that we're going to go into. One, several of the frameworks that you described in your paper and how you apply them. Number two, a regenerative lens to investing. And number three, exponentiality and AI. So beginning with some of the frameworks you referenced, could you explain a little about, what TEA, TRL, BMC, and how you think through those?
Yeah, in my paper on capital scaling and exponentiality, which we're happy to share with any of you that ask, uh, I, I know people like to think in terms of acronyms. It just makes it easier once somebody tells you what it means. Uh, so our focus has very much been to address climate change from a perspective of what we call TEA, TRL, and BMC. TEA is techno-economic analysis, TRL is technology readiness level, and BMC is business model canvas. Um, these, I think a lot of people think about TRL. It's a concept that was originated by NASA uh, at the time of the first moonshot, and but a lot of what we're doing is not necessarily a moonshot. It's down to earth and down to our capitalist economy, and I think there's been far too much overemphasis on TRL. The TRL tells you something works, and that's important, but it's really just the beginning. You can have a TRL 678 technology that works really well, but never becomes the fuel for a great business. What really matters is TEA, or techno-economic analysis. And that's where you ask, how does this scale? How can we apply our technology to drive costs to a point where we can pick up on markets that will adopt the products of the technology? So, a most important question that we find ourselves asking that's driven by TEA is, does it scale? There's been a lot of discussion about John Doerr's book called Speed and Scale. I tend to think of it more as scale and speed, because if something doesn't scale, there'll be no speed. You have to adopt a technology that will scale. That by scaling, I mean that will cut costs by as much as 20% per year, every year. And we've done that with a number of companies. And actually, I didn't even know about this in the beginning, but it was something that I learned at Exxon, because, one of our biggest problems in trying to displace oil and gas is that cat crackers really scale well. You just have to make them bigger and bigger and taller, and they get cheaper. Products get cheaper and cheaper. And that's what we're fighting against. That's what we're fighting against, when we want to do things in a cleaner way. So business model canvas, BMC, is about value proposition. Are you creating something, that a product or service that people will pay for? Who is the customer? Why do they care? And what forces them to act in response to your offering?
So how, as an investor, like obviously as a venture investor, you're looking at N of one companies, or like very unique, innovative companies. Like, how are you recognizing that TEA, and like how could a potential founder maybe see a gap that would be fundable, a viable company that fits those frameworks, especially because this is such out of paradigm work, right? It's very fresh.
Right. A founder has to have vision. A founder has to be mission oriented. It doesn't necessarily have to start at the beginning, but that's the goal. We have to have a vision that we can satisfy the needs of a customer. And we're not talking about software as a service here. Everybody's been spoiled by virality and stickiness. What we do is not about virality and stickiness. It's about basic fundamentals of cost, economics, of driving costs down, and then driving adoption. Cost down drives adoption. So what we found is that it's really important to get a good match between the cost down aspects of your technology and the adoption characteristics of the customers that you're targeting. What customers will adopt when costs are high, so you can still make a profit, and what customers will start adopting when costs are low, when you get down the cost curve. If you never get down the cost curve, you'll be hung up with a very small market of specialty customers. It's really critical to think in terms of cost down and price elasticity of demand. And so everything we do is about matching costs with priceless elasticity of the demand.
So, I mean, you're talking about adoption risk, right? Commercial viability beyond just that technical maturity. How do you evaluate for that, really? Given you are funding companies so early, maybe there's an example of a portfolio company that you really saw something and thought, okay, this is going to scale really well, and this is why.
Well, business is about profitability, and profitability is about capital and gross margins. And gross margins are a function of how much do customers love my product and how much will customers pay for my product. And then you iterate with the cost. What does it cost me to deliver the product? And can I create enough gross margin to uh, achieve the customer's needs, to satisfy the customer's needs without having to subsidize or having to legislate those needs. Those needs have to be real economic needs. So, it's about profitability, gross margins, capital efficiency. Uh, it's, I think, another area that's really important is uh, supply chains. Uh, I think supply chains have become really important in the past few years, especially when you're seeking to get access to critical materials or inputs. Uh, People will adopt alternatives much faster than they would, but there's a system fit. If your solution requires rebuilding infrastructure, adoption is slow. If it drops into existing systems, then adoption can be very fast. And here's where AI comes in, because AI is increasingly moving from being an internet tool to an enterprise tool. So AI is now becoming and moving from being an internet plaything to being a real enterprise facilitator. And we're seeing examples of this all the time. But generally, you want to be looking at things that have each time are better, faster, and cheaper. That's really the focus. That's what I call a clear 2020 thematic lens.
You mentioned obviously the technology or companies to fit within the current ecosystem, and you can see a path for success within our ecosystem. Um, could you talk a little bit about what it looks like to maybe build or fund such minimum viable ecosystems for these companies to succeed? And is it different from building and funding the technology itself, the companies itself? You also obviously mentioned, subsidies and government involvement, which I think the school of thought has been increasingly that these companies need to be able to stand on their own, and maybe not rely on those sources of outside capital. So be able to thrive in the existing environment.
Yeah, well, I think on the part of entrepreneurs, it takes time to develop a clear thematic lens. But we have examples. History has taught us a lot. Companies like Apple, like Intuit, like Intel, like Microsoft, these companies all had big visions. They really understood, for example, integrated circuits. Uh, Bill Gates is the one who understood the power of microprocessor. Bill Gates understood that he could put a computer on every desk in every home by taking advantage of microprocessor. Intel didn't even think of that Intel would have never been successful if it hadn't been for the fact that Bill Gates dreamed of an operating system for microprocessors. So you have to be a very clear thinker. You have to, you know, it's like if somebody asks you what time it is, uh, don't tell them how the watch was built. Tell them what time it is. That's what they want to know. And we find too many leaders of early stage companies that don't get that. They want to talk about their technology. Nobody cares about their technology. And the fact is, if the technology hasn't already been developed, you're not going to commercialize it in enough time to get an adequate return to your investors. If you have to start with a brand new technology, except under possibly under current conditions where AI can be an accelerator, you're not going to have time. It's more about the market, and it's more about anchoring your story in economic outcomes. You know, what problem are you solving today? Who is already paying for a suboptimal solution? And then how much better are you? Because that's going to determine how profitable your enterprise will be in a capitalistic system.
So effectively, they go together. It's entrepreneur's job to either assess the current ecosystem or mold the current ecosystem to a path that'll enable their tech to succeed, their innovation to succeed.
Well, there's we talked earlier about TEA. We talked earlier about technology readiness level. We talked about also the other acronyms that I wanted to bring up because they're relevant to the question you just asked, is what we call MVE, or minimum viable ecosystem.
Mhm.
You know, again, there's a big difference between the virality aspects of software and service and the adoption, the way products are adopted to solve climate problems or resilience problems. It's very different. It's about basic tackling. Technologies don't scale in isolation. What scales is our ecosystems, because in everything we do that relates to climate is proving that the technology works, that someone is willing to pay for it, and most importantly, that the surrounding ecosystem supports it. And when I say surrounding ecosystem, that's what I'm talking about. Minimum value ecosystem. What kinds of collaborations can you produce with other channel players to satisfy customers' needs? Because most of the markets that are addressed by the products that we're trying to offer are already served by existing distribution. The channel is already there. The challenge is, how do I crack that channel and get to a customer? And you're not going to do that in isolation. You have to do that with partners, and partners have to see the value in your product, because everybody has to make a profit along the way. But most importantly, they control the customer. And the only way you're going to get to the customer is by engaging them to work with you to do that, because they can see a synergistic outcome. So this is not about, again, this is not about virality and stickiness. This is about basic blocking and tackling in existing markets, and it's hard.
Could you give us an example of a founder that you've worked with, maybe who's done that exceptionally well?
Yeah. We've done a number of, one of the early companies I invested in was a company called Flextronics. Uh, Flextronics actually created a whole new category of business. It changed what had been called contract manufacturing into electronic manufacturing services, EMS. And their vision was to create a soup to nuts service for the emerging electronics industry. So over time, Cisco and other Juniper, some of the earlier electronics systems companies, realized they shouldn't be manufacturing products. They shouldn't even be touching the products. So what Flextronics was able to do was to convince them to let Flextronics build the products and ship them to the customers of the consumer electronics companies. Very simple, but nobody had thought of it. And we've repeated that pattern with other companies, where because this is the bright side of exponentiality. If you can live with exponentiality, you can harvest the benefits of it, and you're not going to do that with. Now today, it's even more compelling with the emergence of AI. But the other thing that's new in this world, in which I hope I can communicate effectively, is when we look at an opportunity now, we ask three questions. Number one, how does nature do it? Because nature is smart to the extent that she created the benefits and glory of what we have now. Nature's been very smart. It's taken time, but nature is much more effective at developing products than we are. So how does nature do it? And number two, and most important in this time, what is China doing? Because I want to know if I'm going to compete with a company providing products that has no profit requirements. You can't win. We lived with this with solar. We live with this with lithium-ion batteries. How many manufacturers of solar panels are in the US today? How many in China? At the same time, look what these products have done in terms of scaling. The cost of solar is, in 25 years, dropped 99% because of the fact that China just threw a lot of money at it. The same with lithium-ion batteries. Our U.S. battery business is broken right now. And you just can't compete with subsidized products. So I always want to know what is China doing, because it's not fair competition. And then, who is the mission-oriented leader? Who is leading the pack? So we have a company called Luxwall. Luxwall makes insulated windows that are so essentially we replace a single pane window with insulated window device which substantially reduces energy consumption in the home. Paybacks are very quick, especially now in the era of data centers, and everybody knows about rising utility costs in front of the meter. And it's a crisis. And the leader of this company is named Scott Thompson. Scott was the CEO of a company called Guardian Glass. Guardian Glass was the biggest manufacturer of plate glass in the world. And after he left Guardian, I think the company was sold. After he left, he came up with this idea of an insulated window insertion. Actually, we have an R factor now of more than 20. We have paybacks as short as a couple of years. At the same time, utility rates as high as 50 cents a kilowatt hour. So it's just been an amazing adventure. Extremely complex product to manufacture. And without the fact of his vast experience in manufacturing of plate glass products, we couldn't do this. In addition, getting back to MVE, we're making deals now. We're making deals in the channel. We just made a big deal with a couple of companies in Europe where this product is even more compelling, by the way, because utility rates are probably 50% higher than they are here and going up. So, but we couldn't do this without. He has the respect of people in the industry. They trust him. People are not going to let you break into their channel if they don't trust you. You have to build that trust. It's just part of being successful in this field of investing. You can't do it in isolation.
Could
So
we
I
go
think
into
that's one representative, but there are many others. But no question, the shortfall for us is finding mission-oriented leaders. And I think a big mistake that was made in Climate 101 was entrusting the reins of building a company to recent PhD graduates that had no concept whatsoever of how to build a company.
commercial enough attitudes? Yeah. Could we go into actually that first question a little bit? How does nature do it? I admit I am a little biased here because for me, that's also how I like to think about things. Like sunlight led me to far UVC companies, anaerobic digesters, changing the microbes led me to palm oil replacement, right? I love those kind of companies personally. But obviously you do reference nature in your white paper and how effective, how efficient nature is. What all do you think capital allocators could learn from that kind of capital allocation that nature does as a
Yeah,
simile almost?
uh, I think it's super important. I would say nature is TRL 9. Uh, nature's had billions of years to do what they're doing. Uh, we started to go to school on this about 10 years ago with a concept for making food from methane. This resulted in a company called Codexis, which is now in the business of making and selling protein foods, primarily for uh, uh, pet food applications until they can clear the hurdle on human application. But making food from natural gas is quite remarkable. And the key to this are microorganisms that have learned and taught us how to convert methane into protein. We're following a similar path with a company called Windfall Bio. I think Windfall Bio is the most amazing company I ever worked with. what Windfall Bio is doing is they're converting methane emissions into fertilizer, which, of course, in today's world is magnificent given what's going on with fertilizer. But we can actually make fertilizer. We're using microbes that have been Mother Nature gave us. These microbes learned how to grow and thrive by eating methane emissions on the ocean floor. Amazing. And so, nature's been running experiments for billions of years. And furthermore, it's optimized for resilience, for efficiency, and adaptability. It's stunning. And the big difference is how it scales. And nature scales through replication. Small units that repeat and adopt and adapt. Industrial systems tend to scale through fabrication, bigger plants, more capital, more complexity. Nature doesn't have to do it that way. It's strictly about replication. Bugs love to replicate. You just have to take advantage of it. And that's what we've been doing, both with Connexus as well as Windfall and a couple of other enterprises that we have on the drawing board. But it suggests it says one thing that is really helpful here is that it avoids reliance on having to create large infrastructure, right? And that then translates into very high return on capital employed, because capital efficiency is great. We think we can build a $500 million revenue company in 5 years at Windfall, with maybe 20 or 30 million of equity. Well, think about the return on capital employed. It's phenomenal. It's a money machine. And thank you, Mother Nature.
Yeah. Do you think that the current venture model understands this kind of company and is set up to support this kind of natural replication?
Some do. I hate to put down people. I mean, it's not the nice thing to do, but the fact is, a lot of investing in climate in pre the last presidential election was about what I call climate tourists. It was a thing to do. A lot of people got involved. Now, of course, they've all fled. But the hardcore that's left, there are some really good people working these problems, and there are lots of problems, and there are lots of opportunities, especially with the AI is double-sided. I mean, AI is an opportunity to do things better, faster, and cheaper. Everything you can do with AI, you can do better, faster, and cheaper, especially including biology. But AI has this dark side called data centers and grid connection and everything that I'm sure you're all familiar with. And wow, what another opportunity to apply technology to create value. So in my family office, we currently have 7 or 8 investments in various aspects of data center operations, most of which originate with material science. So we've worked in material science forever, and all of a sudden it's important. Before it was always the bottom of the barrel. Today, it's a source of huge leverage, especially after being enabled by AI. We can change physical properties of materials to achieve huge amounts of leverage. We can cool data center operations much more efficiently. We can also introduce fiber optics communications in data centers, which is actually going. Several companies doing that now. It's just a great playground for people that have foundation in biotech and in electronics, information technologies. Because again, it's always about multidisciplinary approaches. So I think one of the companies I'm especially proud of is a company called Cobalt Metals. We were the original investor in Cobalt. Today, the company is worth about $5 billion. And they applied a multidisciplinary approach to solving the problem of finding precious elements like copper, elements vital for the energy transition, copper, cobalt, nickel, and lithium as well. And the companies made enormous products, but they were able to do that with multidisciplinary culture. Again, Andy Grove said, "Culture beats strategy every time," and it's so true. If you have the right culture, you can do anything, especially when led by mission-oriented leadership.
Sorry to switch the topic, but we are running up on time, and I did want to get to a couple of the audience questions. One of which is actually quite interesting because Given Work on Climate is a nonprofit. In what ways do you think philanthropic capital and nonprofit interventions are best suited to complement investment capital to accelerate climate technologies?
Yeah, I think one great opportunity is in science. And I've seen a lot of several nonprofits that are devoted to building a foundation of science, because that's where technology comes from. And so I think the other aspect, which is totally different, I'm just gears completely on you, is an adaptation. Climate change is inevitable, and I happen to believe it is. We're going to have to adapt.
Mm-hmm.
And I believe some of the adaptation, I think, can be done within the free enterprise framework, but a lot of it's going to have to be done with the help of nonprofits.
So much of it is socially driven.
Things like migration of various populations. The biggest, I think, one of the bigger opportunities where both nonprofits and profits could work together is on heating and cooling. So, for example, we were one of the first investors in geothermal. We invested in Fervola. Came out of Stanford Climate Ventures, which is the group that we funded. And it's amazing now. There's probably 100 geothermal companies right now. We did it because we always believed in dispatchable energy. Dispatchable energy, whether it's geothermal. Of course, today, the other technology in dispatchable energy is called SMR, small modular reactors, nuclear. I'm a little more skeptical about that, but it could be a very efficient way of providing heat for certain operations. whether it's data centers, it could be for chemical processing. The amount of heating that occurs in a refinery is overwhelming. And you can cut that. You can cut that with some of these technologies. So again, this soft zone between mitigation and adaptation, I think would be a great place for nonprofits and profit groups to work together on.
Yeah, actually seeing some of that in New York City summers to help people adapt to the increasing humidity and heat. I
Well,
think we're going to go ahead
there
and
there's these islands in the Pacific Ocean that are becoming flooded, right? And nobody wants the people. So what are you going to do? Send them to south of France? But soon,
right.
but soon the south of France is going to be a desert.
I guess that's a question to ponder. I think we're going to go ahead and head to the breakout rooms now. I do want to make sure everyone has sufficient time in there. Um, this is an opportunity for y'all to get to know some other work and climate members in your region, discuss the prompt. Please fill out these rooms about like 5 per room. We'd like everyone to get a chance to speak in them, and we'll call everyone back when it's time to wrap up. So we go ahead and share the prompt, some instructions, and let's go ahead and move to the breakout rooms. We'll get about 10, 15 minutes in there.